Hello everyone, it's Casey Swan, and just thought I'd make a quick video about this velocity banking thing. Um, no, I haven't been making videos that much, but when I'm dealing with people on real estate issues or getting out of debt or anything that I'm dealing with people on, and I keep getting the same question, then that'll kind of push me to make a video. So we're gonna talk about this velocity banking thing. And basically what that is when you take a line of credit, personal line of credit or a home equity line of credit, and you pay your bills, and also you pay off debt with that line of credit. And you take your paycheck, you dump that whole paycheck into your line of credit. Now, in order to make this work successfully, you need cash flow, positive cash flow every month. So that means you need more coming in and going out. At least $500 more coming in and going out. If it's $350 or $300 or something, you can still do it. It's just gonna be a little more tighter. You're gonna have to do things to increase your cash flow. So you need to be speaking with somebody about that before you just go out there and do it. But I'm just giving you a basics about that. So, like I say, you're taking a personal line of credit or a home equity line of credit, which is also known as a HELOC. You pay all your bills with it all through the week. When your paycheck comes, you dump the whole paycheck on your line of credit. That pays you back. It stops interest, all of that. And you continue to do that weekly. Pay your bills again the next week. That balance going up. When you get paid, you dump that paycheck again into line of credit. That drops that back down. Now, if you got debt, mortgage, credit card debt, auto loans, any other loans, personal loans, whatever, you got all this space in your line of credit. Just say you got $5,000 in your line of credit, your balance is only $1,000 or so, then you get paid, boom, you killing that, you knocking it back down. You building it up, you killing it, knocking it back down every week, same thing. You got all this space. You can take, just say $3,000 chunk, make a $3,000 chunk, and that's just an example. And you take, just say you make a $3,000 chunk, you wipe that credit card debt out. Now it's on that line of credit. So now you're still paying your bills. You never stop that with that line of credit. And every week you get paid, boom, you throwing that back into the line of credit. So you're knocking down the bills like you've been doing. The balance from your debt, credit card debt or whatever debt that you wiped out, now it's sitting in that line of credit. So the cash flow, that's why I say you need at least 500 or better. The more the better. That cash flow from that paycheck that's just sitting there is going to be knocking down that balance, and it's saving you a lot on interest, especially with amortized loans, because amortized loans like mortgages, personal loans, term loans, they amortized loans. Normally they're amortized loans, and that means is when you first start paying the loan, most of the money going to the interest. We all know that. That's why your mortgage is 30 years. You pay on it forever, right? But with a line of credit, it's simple interest. So a lot of people say, well, my line of credit is 13%. My mortgage is 3%, 3.5% or 4%. Why would I make chunk payments at my mortgage and bring that over to my line of credit for a higher interest rate? Because you got to understand the difference between amortized interest and simple interest. Amortized interest, like I say, it takes a lot longer to pay the balance down. Simple interest, the money you put on that is killing it right then, because simple interest. It don't matter the number. Just like Celsius and Fahrenheit. The numbers are different. But 30 degrees Celsius is not the same as 30 degrees Fahrenheit. So, same thing with simple interest. 3% amortized interest is not the same thing as 3% simple interest. So, once you understand that, then you understand. When you pay a credit card bill, for an example, put $1,000 on your balance and see what happened to your balance. Make $1,000 payment. You're gonna see $1,000 gone, or 900 and something and change, because they might put out the interest charges. But make $1,000 payment on your mortgage and see how much goes to the balance. I know taxes and insurance got to come out. Okay, so that could be easily $500 out of that 1,000. Okay, but what's happening to the rest of that $500? Look at your bank statement. Look at your mortgage statement. Out of the rest of that $500, you're gonna end up seeing 100 and something going towards your principal. Why? Amortized interest. You know, that's where the banks make all their money. So that's pretty much the basics of velocity banking. You know, if you want to, talk to me about your situation, then I can get a little more in detail. And I'll be making more videos because I know I will be getting the same questions from a lot of people because, I went through it myself, so I already know the questions that's going to come up. I'm still studying it. I've been doing trial and error because I understand the concept. So, you make mistakes, but with velocity banking, you can bail yourself out of those mistakes easier, a lot easier than when you're not doing velocity banking. It gives you so much cushion to make investments. It's all kind of things you can do with this velocity banking method. So, comment, let your friends know, because I don't mind helping folks pay down their mortgage quick. 5 to 7 years is what I've been seeing people do on a 30. So all that can be eliminated quickly by transferring it from amortized interest to simple interest. And if you think I'm just talking and I don't know what I'm talking about, okay, cool. Finish paying off your 30. But if you are really trying to do this and learn this, then listen to what I'm saying and comment or whatever, and we'll be in touch. And you can also go to my description. I have the email address in there. Real estate, or if you want to email me, you can email me at Casey at realestatewithcasey.net, and we can be in touch because it's all about building. Have a good day.